We're taking a look at the major averages here, and we are still mixed right now. But as we were mentioning at the end of the 10 a.m. hour, we're seeing some hyper oscillation in and out of gains and losses here on the day. Here's a snapshot of where we are 90 minutes into trade. The Dow Jones Industrial Average right now down by about 0.1%. S&P 500, we're seeing that flat just barely to the downside, about the same on a percentage basis as the Dow, 0.1%. However, on the flip side of that, you got the NASDAQ Composite right now in positive territory. We'll see where things move from this point forward here. We've also been keeping an eye on oil, treasuries, and all of this after the Fed's aggressive rate hike. Increased risks of a recession, they came into view. However, despite lingering recession concerns, analysts left corporate profit estimates largely intact. And for more on this, we have here Yahoo Finance's Emily McCormick.
Well, Brad, as you mentioned, Wall Street is still pretty upbeat on corporate profits, even as we've had these recession concerns flaring. Analysts specifically have only revised down their estimates by about 1.1% for the second quarter between March 31st and June 30th. And that data is from FactSet. Now, estimates usually come down during a quarter, but the margin of decline that we've really been seeing over the course of this quarter specifically has been much less pronounced than average. You can see there on the screen that 1.1% decline in estimates that we've had for the second quarter. But over the past 5, 10, and 15 years, the average earnings estimates revisions have actually been down by 2.4%, 3.3%, and 4.7% respectively, again, over that historical time period. So again, a 1.1% cut really isn't that pronounced. And even more so, analysts have actually raised their estimates for the second half of this year. They actually hiked up their earnings estimates for the third quarter by about 0.4%. Now, why this matters is really for two big reasons. Now, first, it's just really interesting to see that these estimates have remained largely intact, even as we've had Wall Street economists really ratcheting up their expectations for a recession, for a formal downturn in the economy. And yet at the same time, we haven't necessarily seen these same downgrades in earnings just yet. But second, to that point, it implies that there's potentially more downside here once we eventually do get these earnings revisions to the downside, once we finally have those earnings, these estimates catching up with the reality of the deteriorating economic data that we've been seeing as of late.
Emily, you really get the sense looking at this data, which of course really enjoyed your morning brief newsletter this morning on all this, but we could have a challenging earnings season.
Absolutely, Brian. I mean, you're already, again, we're still waiting to see necessarily these earnings estimates coming down. But when we take a look at what analysts are looking for on the street, 4.1%, that's the estimated second quarter year-over-year growth rate for the S&P 500. If realized, that would be the slowest rate that we see since the fourth quarter of 2020, of course, when the pandemic was really at a height, of course, across the economy. So certainly likely to see a tough earnings season. It's going to pick up with the big banks starting to report just next week. So we'll see what we ultimately get here. But potentially, again, seeing some profit margin pressure that a lot of these strategists have been talking about over the past several weeks.
And we have one more graphic here, and I think you left out of the morning brief newsletter, Emily. Let's cue it up here. It is actually a goodbye graphic for our very own Emily McCormick, who is leaving us to go to business school. And I won't go on at length, but for me, to you, Emily, it has been a pleasure watching you crush it here for close to 4 years. It's been a joy working with you. This whole team here is really, really going to miss you, but I know you will continue to achieve amazing success.
Brian, thank you so much. I really appreciate that.
All right. Now, I think we have you for a few hours left, so go right on. Emily McCormick, thanks so much. Remember, tune into Yahoo Finance starting at 9.